You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for the option block. Everyone's favorite, hopefully your favorite, certainly my favorite, bi-weekly source for all things options related. A little bit of options wit, a little bit of wisdom, sprinkling of analysis, some education, some what's trading, some peering into the futures, a dash of strategy, a whole bunch of unusual activity, and of course a dose of your questions. We mix it all together and we have the witch's brew. That is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Quite a few programs for you guys to choose from, including 500-plus archived episodes of this fine program, the option block, dating back, oh goodness, over 5 years now. I have to remember the exact starting date. Probably coming up on 6 now, if I do my math correctly. So quite a few episodes for you guys to sink your teeth in, of course, as well as all the episodes of our other 14 programs on the network. Where do you find all that goodness? Well, of course, the mothership, the flagship, theoptionsinsider.com is the easiest place to start your audio adventure. Of course, while you're there, by all means, check out our breaking news from the options market. More unusual activity than we have time to get to on this program, and indeed on the days when we don't do programs. Still more UA going up there. Breaking news from the options market, all sorts of fun stuff. And when you're ready to begin your audio adventure, click on that Insider Radio Network tab, and your journey has begun. Of course, you can always find us iTunes, TuneIn, Stitcher, and so on and so forth. Of course, also via those app stores, so the iOS App Store, Google Play App Store, and even the Amazon Kindle Fire App Store. You can find our app. And, of course, however you listen, downloading, streaming, including those of you, I should say, who can join us live every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. We'd love to see you guys live via Mixlr, MIXLR. You can always hit us up that way as well. And however you listen to us, make sure you hit us up with those questions, those comments. We love to hear from you guys. And joining me on the old program today on this special holiday edition of the Option Block. The markets are enclosed, so we're still here. And joining me on the old program today, starting off immediately to my left, steering right through my head as we speak, is Mr. Todd Rich, the president of Option Monster Media, taking down the hot seat this week. Todd, welcome back to the Option Block program, sir.
Thank you, Mark. Good to be here on this wonderful holiday. Where would we be if Columbus had not discovered
Where
America?
would we be indeed? Let's open up that can of worms right now, because nothing deeply political or non-PC involved in that discussion whatsoever. All I know is we get the short end of the stick. We used to have it as a holiday in the markets, then they took it away from us, and now it's just, whenever the markets are enclosed, to me it's just a faux holiday thing. It's not real, it's not legit if the markets are still open. But of course, we're still here bringing you the show, so it gives us an extra chance to do a show shot. Like Todd, so I guess we shouldn't be too upset at our friends and poor Mr. Columbus. rolling over in his grave as we speak. And also joining us a little bit farther from home, but also Italian, so also feeling deep umbrage over the lack of love for all things Columbus, Mr. Andrew Giovinazzi from OptionPit.com. Mr. G, welcome back to the program. And how do you folks up there in the hinterlands of Maine, especially you three Italians in Maine, how do you celebrate Columbus Day?
I celebrated it by working today. In the old days, there used to be a Columbus Day parade. I remember in San Francisco when I lived there, down Columbus Street, and then I don't know what happened to it. It's been a while since I've been to it, but Maine actually just Columbus Day, I think just kind of, it comes and it goes. Oh, you know what it is? It's high season for the leaf peepers. I forgot. So actually I'm supposed to go out and take some pictures of my trees and send them to the people I know and stick them on Facebook so they can see how lovely and red our trees are.
That's true. It is the high season for you folks out there, when all folks come from far and wide to gaze upon the wonder and the mystery that is New England in the fall. It is indeed a beautiful area. I grew up south of you, but still in New England, and so autumn, beautiful couple of weeks out there before it all falls off and it all gets quite gray and dreary. Before we get gray and dreary on the L Show, let's keep on rolling into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. Like the man said, this is the portion of the show where we tell you what was catching our eye in today's activity. A lot of upside on the old street today. Most of the major indices closing up on the day. S&P, Dow, NASDAQ, all off around 0.5%, a little more, a little less, give or take, depending on where you're looking. VIX cash also inhaling a little bit today, getting some of that weekend love back a little bit, about 13.5, so essentially unched, but still leaning towards the green side of the street as it races to unwind that ever-delicate dance between the front-month future and the cash. Something has to give. Maybe it's the cash. We shall see. But something has to get closer to the other, and somewhat soon as that keeps unfolding. An interesting day in the street today. We mentioned a lot of upside, a lot of that coming on the heels of the recent rally in crude, sparking some life in everything crude-related on the old market, and that seemed to kind of bolster hopes across the board that perhaps we are headed for greener pastures out there. Speaking of green, Todd, a lot of green on the screen today. What, if anything, caught your eye over there in the land of Option Monster Media? And also maybe what were some of your chattees and committee members over there? What were they chatting about today over there in the land of all things Option Monster?
Well, we did notice that there's the couple of sectors that are leading this rally, and they have been for the last couple of weeks. Banking, the financials, and energy. And that's really where it's been hot. You've seen a little bit of sector rotation. Those industries definitely coming back, people pouring some money back into them. Today, really, a lot of the chatter was more about something that was down substantially, which was Twitter.
Someone talking about Twitter again? You're blowing my mind here, sir. This is madness. I can't believe Twitter would be a topic of discussion. Off last week, off again today, off nearly 11% to end the day, off two handles. So south of that mystical 20 handle that was flirting around for a while there, about 1770 or so today. It looks like the option volume just off the charts. I'm sure you guys were seeing a lot of this today as well. It's been averaging about 180,000 contracts a day of late. That's already inflated from recent volume, and now you're seeing about 570,000 contracts today, 1.5 to 1 calls over put. So calls outnumbering even on the downside, which is kind of interesting. But it sounds like you guys are seeing a lot of Twitter love over there in Option Monster Land.
Well, it is a hot topic, and it's not so much the stock price that people are really talking about. What's getting more attention is the market cap. Even down here right now, it's in that 12 billion range. And clearly there's talks, someone might buy the company, but then the market just ran it up. I think it might have topped out at 18 billion. I mean, it's a number. And without any question, without any answer on how you're going to answer the question, what's going to justify a valuation that large, it gets really challenging for someone to even want to come in bid. So there's a lot of sellers out there just because it's still north of 12 billion, and they have no idea how they're going to monetize it.
It's funny. When I saw some of the names you might expect to play in that, like the Googles and others, kind of backing off. It makes clear and total sense for Google. I mean, remember back a few years ago, they launched Google Plus. Because why? Because they can't index Twitter. They can't index Facebook. There's a lot of data there that you can't get with a Google search. So they said, we'll create our own social network so we can index that data. So there's a lot of value in the data, particularly to a search engine company like a Google or indeed a Microsoft. Those two I could see. But now with those kind of backing off, you're right, probably due to the valuation, even they couldn't make it make sense at the end of the day. Salesforce still lurking in there. The aggregation of Twitter and Salesforce to me is just completely mind-boggling. You have one thing that can't make money and one thing that can make money, but if you ever use Salesforce, the UI looks like it was made in like 1992. We finally had to just get rid of it for our company. It was just too mind-boggling for most people to use. Those things coming together, I don't know. Maybe you're more you're more optimistic on the chances of that than I am, but that doesn't sound like a merit. It reminds me of the old Hewlett-Packard Compaq days. Like, that doesn't really make a heck of a lot of sense. I'm getting a whiff of that here with Twitter as well.
Well, there might be something that makes sense there, and you really don't know what they're thinking or how they would integrate it. But I think ultimately it's the number. And maybe in the markets right now saying maybe 12 billion might be the right number. But someone's going to run it up to 18 billion and think that some Google's going to come along and just say, who cares? It's just 6 or 7 or 8 billion more. That's a silly statement. $1 billion is $1 billion to anybody. So it's got to make economic sense. And when it gets out of line like that, people will step away.
Google has been known to make plays for things that don't make a lot of economic sense at the surface. They can find ways to make it work, and I think if anyone could, just think about how much data you're talking about. Data mining, big data, the big thing. If there's a definition of big data almost, it kind of is Twitter. Look at how much financial data we see going up, how many startups and things we've seen out there trying to monetize and analyze that data. Or monopolize. That's a good combo. I kind of like that. The monopolizing of Twitter. I kind of like that. I might have to trademark that.
Monetizing the analysis of data.
Exactly. We coined a new phrase. Don't run to your keyboard. I see you typing trademark that.
I'm trademarking that right now.
I'm going to kibosh that. It's in the studio. We have domain on that. But yeah, monopolize. I like that. Monopolize.com coming soon from the Options Insight. It doesn't make a heck of a lot of sense for others who can't really monetize that. Maybe Salesforce can. Maybe there's some nuances there I'm missing, and I'm sure there are if they're willing to pay that kind of money, but still. I don't know, Mr. Rock Lobster, you guys have an active chat room over there as well. Was Twitter lighting it up in your chat room? And what else was catching your eye in today's activity? I'm sure this ever kind of mystifying dance between the VIX front-month future and the cash has also been catching your eye a little bit as well.
Well, I think it took me a while to figure out with VIX. There is 3 different vol markets going on.
So you figured it out now? Because I thought it was just a mystery wrapped in a riddle, wrapped in bacon. Well,
that's exactly what it is. You have the weekly VIX futures, which basically are not going to give it up. And I think it's around the election. So every time we have a debate, we have a real bid for the short-term VIX futures like the Oct 12s. And then as long as Hillary or there's no big revelation coming out, the future loses its bid the next day. And I was looking to see what happened last time. So what happened is you have these debates, and right now it looks like, I guess, Wall Street and Main Street, at least the vol market, is thinking Hillary is going to win. So as long as the status quo stays in play, the vol market's happy. So you had the short-term VIX futures finally drop the most today, like literally just plopped almost down to cash. You still have the regular, everything that's kind of running off the serial futures like October and November. They're holding starting to hold the election juice. So that is not going to move as much. So you have like a short-term VIX future. You have the vol products kind of, oscillating around, sort of like the 13 to 14 handle in VIX. And then you have, just the cash index from the SPX. And where's the market going to go between now and November? Is it really going to go anywhere? So you've got the cash volatility from the SPX trading. Yeah, I would say in like a no man's land where it's sort of not high enough to sell, but it's not cheap enough to buy, which is exactly in the annoying zone until the election. So I just figured there's those 3 vol markets. There'll be some oscillation in between. And, ultimately, I don't think there's a lot of trade unless something off the cuff happens. The vol market will be dead till the 7th. There'll be a little oscillation. There'll be some decay, but unless something goofy out of Europe happens or there's a massive Trump revelation about Hillary or something, it just looks like it's sort of predestined at this point. So that was a vol market as far as Twitter goes. We're trying to look for bounce plays, starting to entertain selling some puts. I think it might actually make a decent kind of wheel trade at the 17 or 16 level. 14 is the low. I dumped most of my trading position last week, actually all of it. Except I was sad I got rid of my puts. I could have kept those a little longer, but either way,
the Twitter love is no longer alive over there in the option pit land.
It's as far as the Twitter, we're trying to decide on what the best way is. Maybe kind of financed upside. Without this bid, I think it goes back to what it was doing, and to me, the best trade was always you wait till the vol gets to 40 and then you just buy some options. Because it's still a story. Either the story is really good or the story is really bad. Right now, the story is back to being bad. So possible time spread, some upside stuff, but somebody still could buy it. Just don't know what price. So again, that's another a mystery wrapped in a. It's a global social media property for $12 billion. I don't even know if any of those exist anymore. With Snapchat going public and $25 billion, and they don't make any money. So it's kind of I have to say I still think it's an undervalued property. It just doesn't feel like it's a very well-run property given the amount of users they have. But that's it. Oh, and then lastly, just Tesla. There's a new Elon Musk announcement. So every time the stock looks crappy, he says something on Twitter and it goes up like 7 or 8
So that means it's another day in the market. There's a new Elon Musk announcement. That's what you're telling me. It's a Monday.
I believe it's a Monday. It's a day with a Y.
Yes.
But since the guy is a multi-billionaire and he's pretty smart, I can't really fault him because, whatever he does works. So, but it looks like it caught a little bit of wind, but it's, I think they're having, especially with the digesting Solar City, this, even for his talents, which are, I would say, large, it's not going to be an easy one for him, I have to say. So that looks like it's sort of pinning around the 200. It's like this sort of week is that kind of action to me, sort of, pinned around, just not doing much. I guess today was the Hillary didn't blow the debate relief rally. I couldn't think of any other reason why we rallied besides oil starting to look better. And that's basically all I can really think of as far as that goes. So that's what we got.
You got the Tesla hype rally, which you're right, it is a Monday, or indeed a day ending in a Y. So there's going to be yet another Tesla hype rally back again over that much ballyhooed 200 handle at about 201 almost. Up about another 2%, you're right, on the hype machine, keeps on rolling. I'm talking about a name that's in the opposite direction, maybe in terms of hype. We're talking about Deutsche Bank not bleeding so badly today, actually up about a quarter on the day. So hovering a little bit south of the 14 handle. And they had an interesting Reuters had an interesting interview. How about, here's a guy whose job probably you don't want to have right now, the chief risk officer of Deutsche Bank. Guy might be in a little bit of a hot seat there. He came out today and said, well, the risks in our derivatives book are massively overestimated, he said. He said the 46 trillion euros in derivatives exposure that they said they had was large, but it's only the notional value. It just doesn't expect counterparties and offsetting, all the other stuff like that we've come to see. But still, I can't imagine, Todd, you'd be in a huge hurry to trade places with that fellow and take his job right now.
I'm not even sure. Is 46 trillion a real number?
That's a number. That's a mighty number.
I can't even wrap my head around that. That's what everyone's talking about. Deutsche Bank's just an interesting one. In as much as last week, it was almost as though there was a good old-fashioned run on the bank.
You had those images of the old, Weimar Republic with the barrels full of Deutschmarks rolling to the bank, and you kind of had images of that in your mind.
That's definitely what it was conjuring up, and the stock was just getting demolished, and it looked like they were going to go under, that the German government was going to have to step in and save them. And I know that there's some people, some hedge funds that have taken some of their extra cash out of Deutsche Bank, and people are talking about their books carrying an enormous amount of risk. But I think really what the story last week was, and we're coming back to that 12 billion number again, still an awfully large number. That was the U.S. Department of Justice was going after them, and they were talking about a $12 billion settlement that when the real number came out, it's closer to $4 billion, which is still an enormous number. But when the market saw, hey, it's only $4 billion, that's when you saw Deutsche Bank sort of hit its bottom and start coming back, and the run on the bank stopped, and it looks like they're going to be saved, and it doesn't appear as terrible. But man, the news stories went out, and people went after that with a vengeance. It was surreal almost.
I should point out, Andrew is reminding me, as the diehard fundamentals that he is, it nets out to only 41 billion with the B. There's Todd. So that should make you sleep much easier at night. It's only 41B instead of 46T. Quite a difference, but still, you start getting into that many zeros, the mind boggles at the sheer amount of risk. Speaking of boggling the mind, let's do it. Let's dive right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time for the downright dubious portion of the show, the portion where Andrew and I, and sometimes Todd, if he's feeling dangerous, put on our trench coats and our fedoras and proceed to the dark side of the options market to uncover some interesting and sometimes head-scratching paper. Maybe let's kick things off, Mr. Rocklouse. Before we dive deep into that, we'll actually cheat a little bit with some listener mail from last week. We had, what was it, his name? Trader Anki asking about Cabela's, and of course there was a takeover the Friday before, Bass announcing they're taking over Cabela's. He pointed out a lot of dubious, what he termed dubious open interest. The stock was taken over for $65.50. He saw a lot of interesting heavy call open interest. Saw a DEES 45.50 put spread that he thought was used to finance a bunch of DEES 60 calls, about 9,000 of those versus about 5,000 of the put spread, so maybe a nice funky bullish risk reversal. Also some upside paper in ACH in there. I know, Mr. Rocklopser, you were going to dig into that before the show. Anything else catching your eye about when that open interest was opened, or is it as dubious as it appears on the surface?
Well, let's just call it semi-dubious. There looked like there was two main days. There was the 29th of September, and there was the 15th of August. I think a lot of the DEES went on. I think the combination, the call-put combination, like the D60s 45.50 went on. It's hard when you look at the pricing that it actually went up as a it's hard to see that it went up as from the long side. It looks like they sold the put spread and then got probably the best deal ever for the D60 call. So it's possible that it was a risk reversal for a small credit, the way it priced. That was the DEES 50-45. And then there was tremendous activity in mid-September on the 50-60 strikes, which to me, it's almost like they roll somebody. It wasn't enough volume. It was new volume. So because there was 4,500 of the D60s traded. And then there was a 50-60 call spread, which was brand new volume, I believe, it was on the 29th. And they just wanted it. There was also a lot of volume on the ACH 55s just a couple of days before the bid. Tremendous ACH 55 volume. So, you look at it, the OC 5570 volume, it kind of sticks out a little bit on that one. So there was probably, I'm going to say, somebody was leaking something because there was basically 3 sets of bullish paper that under normal circumstances, you don't buy the OC 5570 call spread in Cabela's. Okay,
it's poised for a huge pop. But
you could.
I had a similar feeling glancing at that last week on the show. It seemed some of the symmetry of the open interest seemed like there probably was a vertical going up. And 50-60 would make sense given, of course, where it was going up and where it was trading at the time back before the announcement, right around 54 or so, 54.5. So 50-60 is kind of splitting the difference. A nice way to get a nice little vertical pop. It does seem like our friend was correct. Perhaps some, shall we say, Mr. Rock Lobster, dubiously timed paper. Are you comfortable with that?
I think for the show we could comfortably say dubiously timed.
Todd, you got to turn all your scanners over there and in the land of Option Monster over to Cabela's forthwith, post haste, and get us some interesting info maybe for the next time you're on. 'Cause I know you guys are always running funky scans over there. Anything come up on Cabela's on your radar over the past week or two over there?
I don't know specifically on Cabela, but I'm sure this kind of unusual volume on something that does not trade this kind of size with low open interest. This definitely would have showed up all over the radar on the research lab at Option Monster. I mean, this is exactly the kind of thing that would have been identified. I personally didn't see it go across, but if I asked one of my analysts, they'd probably say, of course. And it does seem a little peculiar. Somebody seems to have known something. But if you're ever looking to try to identify some of that, you can always take a look at the research lab on Option Monster.
There you go, listeners. Second tab there on the homepage. I'm doing it right now. I'm looking at it as we speak. So maybe we'll come up with some interesting nuggets as we roll along with the show. Speaking of rolling along, our next victim. I can't decide, Todd, if it's a good thing or a bad thing to be featured in the Odd Block segment. I mean, something probably is up with your name, but it could be bad, so maybe you don't want to be featured in here. This is, of course, this is a newcomer, Energy Transfer Equity LP. Ticker symbol ETE, closing today, $16.35, up about 40 cents or a little over 2% on the day. It's a name that does about 24,000 contracts a day, so decent paper from an Odd Block candidate. Doing 65,000 today. About 35 to 1 calls over puts. That should give you some inkling, some indication, listeners, of what caught our eye. But it wasn't front month, it wasn't Nov, it wasn't even D-Snope, all the way out to Jan, listeners, of 2017, where we saw a bit of a funky ratio vertical, but not VIX this time, Mr. Rock. We used to talk about this stuff in VIX, but we're not talking a 1x2 here, and the opposite way, it seems, here in ETE. In particular, it was the Jan 17.5 21x2 going up 8,500 by 17,000 times. Total on the day about 20,000 by 40,000. So pretty much exactly 1x2. Looks like paper buying the 17.5s and then blasting out twice as many of the 20s. Doing it for $1.05 over 40 cents. So paying about a quarter to do that vertical there. An interesting spread. There is some size open interest on these strikes, about 23,000 on the 17.5s and about 72,000 actually on the 20. So our friend here could be unwinding. It is possible given the size of the open interest, or he could indeed be piling into more aggressive upside, maybe taking the opportunity of a recent sell-off here in ETE. This thing was trading around 18.5 or just about a month ago, and now down about 2 handles from there. Maybe taking the opportunity to put on this 1x2 for a little bit cheaper here. Either way, it's a funky spread. Mr. Rock Lobster, I know you were looking at this earlier this afternoon. What's your antennae? What are they telling you? Are they thinking this is closing or piling on?
Well, I mean, to close it, the way this spread is priced, it trades where the customer is probably selling the 20s and buying the 17.5s. So that means they had to be long the 20s and short the 17.5s. I mean, which could fit. So they kind of snuggled the trade up when it was trading higher, and now they unwound it, which is certainly possible. but I'd like to see the open interest on it before. So I could see if there was, but still they had to sell to close. So that means they owned the 20s and they sold one. So they had to get a pretty decent credit for that trade. I mean, the only way I think they could do it is that they got it right at the top. And I was looking for the kind of volume on it, which didn't quite make any sense. So this is definitely a head scratcher because, it feels like they're putting it on to get a little jack into the end of the year, because that would be the kind of trade where, they put it on for small, only 25 cents. You do get a little bit of a rally, and then the thing's worth a lot of money at the end. So, by the end of the year. So it just seems like the natural way would be kind of an opening 1x2 where they're just loading more volume on, because the pricing is just, it makes a weird close, and I couldn't see the entry price the other way. So, I mean, either way, if they're shutting it down, they're selling out their 20s and then buying back the 17.5s. They're doing that because they think the downside is over. So one way or another, from the customer point of view, it looks kind of like a little bit more of a bullish type of trade in this area. And we've talked about these MLPs now for 3-4 weeks with when Todd's coming in. So there's been activity. The price of oil is stabilizing. So you could see some higher prices and dividends coming back into this group in the not too distant future. And I think maybe that was part of the impetus for this particular trade. Either way, it looks like a bullish intention on the customer side.
I would completely agree with that. As a matter of fact, I mean, I look at this, there's no question in my mind when I see that, and I see the stock has recently sold off, and someone's doing a 1x2 vertical call spread. To me, this smacks of a stock repair strategy. I mean, this is exactly what a stock repair strategy would be. Someone owns the stock, they bought a lot of it, the stock sells off. Now they're trying to just get their money back, and the strategy is to buy a 1x2 call spread, and you're doing it 1x2 because you own the stock. You're going to double up your ownership on the stock with the 17.5 calls. You sell twice as many of the 20s, which is essentially buy writing half of your stock and then just adding a call spread on top of it to make back some of your losses. And if this thing should make it back to 20 by the beginning of next year, they might just be digging themselves out of a hole. But this looks exactly like a standard stock repair strategy, where someone was long a lot, it went wrong, and now they're just trying to fight their way back out. If for 25 cents, this thing does rally back. It's not a large capital commitment, and you will make your money back a little faster by doing this strategy.
It certainly does have all the hallmarks of that. A fun strategy. We haven't really detailed that much here on this program. Somehow we've eluded that one. Maybe Uncle Mike has done it in the strategy block a few times, Mr. Rockoff. So I'll have to go dig into the archives to see. Meanwhile, we'll keep on rolling into our next victim here on the old odd block. This is Boston Scientific. I haven't talked about this one in a while. BSX is the ticker, closing today about 23.77, up about a little over 1% on the day. So outpacing the market a bit to the upside. This is the name that does about 3,400 contracts a day, doing over 9,000 today, 9,400 to be precise. 28-1 calls over puts. Once again, should point you in the right direction. If you want to find the paper, listeners, scroll on down the chain a little bit. Again, we're going a little bit farther out, all the way out to Nov and then beyond to Feb of 2017. It sounds so far away, doesn't it, Todd? Feb of 2017. What we saw looks like the Nov Feb 25 call spread going up quite a few times here. Looks like starting it off about total of about nearly 5,000 on the Novs, 4,800 to be precise. and about 3,000 on the Feb. So open interest pretty sizable on the November, about 7,400 contracts. Nothing to speak of on the Feb, about a couple of hundred. So it looks like paper is opening, buying the long lay, buying the Feb for 95 cents, selling the Nov for 35 cents, which case they appear to be rolling. Don't see any stock or anything else going along with this, and this name has been kind of vacillating right around pretty much where it is for the better part of the last since early summer. It's been pretty much vacillating in this 22 to 24 range. Had a brief blip almost to 25 back in July, and that's kind of about it. So it has been fairly range bound. May make it an interesting candidate, Mr. Rock Lobster, for a bit of a long time spread, or perhaps indeed if our friend is rolling, he wants to keep the love alive a little bit longer. Interesting timing to roll Nov now. He's still got some time left on that, obviously, and this name hasn't really moved a ton. So interesting timing either way, but I guess that's why we call it the odd block, right?
We do. I mean, it feel like they want the deltas. It really doesn't pay a dividend, and they don't want to buy the stock. It's not a very expensive way to buy a delta. I mean, the stock 2 years ago was trading like $12. I remember it trading $8 in 2012, I think. And right now it's, you could buy that. You could buy that spread. I mean, you could literally have. I mean, it's 95 cents. It's about a 40 delta call for 95 cents in a $24 stock. It doesn't feel that expensive, and it's only 60 cents if the spread is opening, but it looks like it is a close the Nov and open the Jan. So, but still, you think about it, that's not a very expensive delta to go out to November. You can buy the 25 time spread for 60 cents. It just doesn't feel like a lot of money to spend for that much time for a $24 stock. So, I mean, I know they make all kinds of medical devices and stuff, and it's not the industry I think you want to be in next year, depending on because it seems like they're kind of hammering away at medical devices and drug companies on pricing and things like that. So, but it sure looks like a cheap enough call spread to buy.
Yeah, we certainly have seen worse. We've certainly seen more expensive for perhaps more dubious reasons here. So this one, I think more of a timing issue as to why exactly you would be executing it, in addition to the size, which makes it come across our radar here in the old odd block. All right, we'll take it home now with Nabors Industries, ticker symbol NBR. Closing today up about 2.5%, so outpacing the market substantially to the upside. That's only still 33 cents. This is the cheap name, listeners. It's about $12.93. This is the name that does about 1,800 contracts a day, doing just a hair under 5,000 today. About 13.5 to 1 calls over puts. Yet again, should point you in the right direction. And what caught our eye was a pretty big chunk, shall we say, to use the technical term, of the Jan 13 calls going up. Paper, looks like paper blasting out about nearly 3,000, 2,900 for $1.35, going up with no stock. Looks like it might have a tag that indicated some stock, but we didn't see any size stock going up with this name. Again, stock went, price of the options looks like the execution as well, consistent with someone looking to overwrite themselves some stock at that price. You're getting around 10% if this thing comes to fruition out there in January. Looking at all things being equal, this thing has been on a bit of a run of late, rallying all the way just in the last couple of weeks, actually, from about $10 and actually as low as about $9.30 back even a week before that. So the last couple of weeks, rallying from $9.30 all the way up to flirting with 13, actually breaking through it today, hitting 13.11 today. So this thing has been on quite the upside tier. Perhaps an underlying holder here deciding to take advantage of this opportunity to blast out some 13s. If it goes his way, then he's got some, these are, again, at-the-money calls, listeners, so clearly he's not afraid of perhaps dumping the stock effectively at about a handle or so higher. And if not, he's got a little bit of cushion to the downside and taking advantage of selling some upside against it. Mr. Rock Lobster, take us home. We've seen a lot of interesting hunts for yields, a lot of them going perhaps a lot farther out for a lot less return than this one. So I'd have to say, in the annals of our recent yield hunts that we've detailed and chronicled here on the Odd Block, this one isn't the worst one I've seen. I guess that's damning it with faint praise, but it's not bad.
No, I think, you look at this, you see, okay, oil has snuck above 50. It's not $35 anymore. It hasn't been 35 in a while. I don't know what machinations the massive oil market has made to do that. Maybe Saudi Arabia scooped up all the U.S. producers in bankruptcy court by buying their bonds for pennies. I don't know. But now I guess they feel they can raise oil prices again. This is just one other energy company that is close to a 52-week high. You can actually write a call and make, a decent return till the end of the year. It's 10% to January. That's not too bad. In a year, probably we're not going to do much. You just write that call and forget about it. So we've seen yield hunters for much less than this. I mean, this is about 2% a month, which isn't bad. There's more of this type of paper. A couple of weeks ago, we were profiling a lot of just call buying, and with oil kind of making this move, we're starting to kind of see the opposite, more like yield plays, or what Todd was saying, you have a replacement strategy because ETE pulled back a little bit or something like that. So instead of, you're not seeing as much I'm going to go buy the calls. It's more, let's grab some yield that we can now kind of lock in our gains on the equities that we have and move on. But I mean, oil is just kind of making that quiet creep higher that nobody seems to be talking about very much.
Thank you for that, Mr. Rock Lobster. Yeah, an interesting one. Yeah, definitely in our recent yield analysis we've done here on this segment, with people rolling out 6 months for a penny and things like that. This certainly qualifies as a bit of almost a home run compared to those. Certainly, again, damning with faint praise, but I've seen worse. All right, let's keep on rolling. It's Monday. Means it's time for you guys to take the reins and dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody. Todd's cracking up here at our backdrops on our computers here in the studio. But it is time for the mail block, indeed, the portion. You guys miss all the fun stuff that goes on in the transitions here live in the studio, listeners. Let's put a little camera in here. It'll certainly bring a smile to your face. All right, and this is, of course, the portion, like the man said, where you guys take the reins with your questions, your comments, and your insights. Hit us up. No shortage of ways for you guys to do just that, including live. If you are indeed streaming live, you can hit us up there via the chat room. We're monitoring that, or, of course, hit us up Twitter, Facebook, some of the other outlets, and we should be able to see those in time to maybe get them on the show, even though we do have a big backlog of questions. Really quickly, running down our question of the week results from last week. We asked you guys, what's your favorite way to trade volatility? Is it VIX? Is it VXX? Is it XIV, SPX, or SPY? Maybe delta neutral straddle, somewhere in that range. Todd, you probably have it in your notes. You're probably cheating. You see the results. Do you see it in there? Maybe it might have been a late edition. So don't look. Okay, don't look. He's not cheating. I'm going to try to stop him from cheating, listeners. Really quick. There you go. That was purposeful. So you cannot cheat. I knew you'd have the impulse to cheat. I protected you from yourself. So what do you think of those choices? VIX options or futures, XIV, VXX, or maybe a little bit more hardcore, an S&P delta neutral straddle. What do you think won our poll for your favorite way to trade volatility for our listeners?
Well, if I were to, my personal choice would probably be the actual volatility in the SPY or the SPX. If it's expensive or what I consider to be expensive or inexpensive implied volatility. But my guess is on a poll, I'm going to have to go with the VIX because that's just what gets talked about by the talking heads on the TV all the time, and that's probably where the listeners are just going to go to.
We do have a whole show devoted to it on this network, so we have kind of poisoned the well somewhat. But yes, I kind of thought VXX and others would have a stronger showing. But yeah, VIX blowing the doors off, about 42%. VIX option. Again, it's two products in one, options and futures. We kind of had to aggregate them, so maybe that's cheating a little bit. But still, the 42%, so nearly half of you preferring that way. Only about a third, a little less than a third actually for VXX, about 29%. XIV, 18%, and the aforementioned S&P Delta Neutral Straddle, only a meager 11%. Todd, so no one's feeling the love for your own personal favorite. We threw that last part in there just for you,
me,
just for you to be happy.
Part of the minority.
Yes, clearly. We'll have to see. We haven't concocted our question for the week this week, so stay tuned for that, listeners. Meanwhile, let's roll on some other questions. This one's been kind of sitting in our inbox for a while. It's a good one I've been wanting to get to for a while. We just had a lot of questions. This one is from Jack Schwartz. He asks, he wants to know regarding stock replacement strategies. Hello, Option Block All-Stars. Well, hello, Jack. Welcome to the program. He goes on to write, my question refers to the stock replacement strategy you advocated on a recent episode. He puts in parentheses, I'm sorry, but I don't remember the episode number. Well, that's it. We have to delete your question. If you don't remember the exact episode number, then we can't help you. No, I'm just teasing. He goes on to write, the benefits you listed included reducing your capital outlay since equities can only be margined at 50% while options offer substantially higher leverage. So can I assume that I can receive the same benefits from this strategy using a stock future that I can using an equity option, or are there elements that options provide that futures do not? Thanks, Jack. Well, that's an interesting question. Todd, I can see you salivating, so maybe I'll let you have at this one. But this is something we talked about a lot here on the network in the past, kind of just the many and myriad benefits of swapping in an option for that stock. And he mentions the capital. That's certainly a big one. But there are a lot of other things that options bring to the table that even a single stock future do not. So why don't you maybe illuminate some of those for our friend here, Mr. Schwartz, Todd?
I'm definitely going to jump all over this one because it's actually one of my favorite questions to answer. But first, I have to mention that Jack Schwartz, what a great name. That's our cigar shop here in Chicago.
Oh, you're right.
Right in
maybe
the Board of Trade.
Maybe he's picked something up all these years in the Board of Trade, and he's writing in. He's bored in between smoking cigars. He wants to know about some stock replacement.
And just for all the listeners, the posterity here is Jack Schwartz is a tobacco shop that goes back probably close to the founding of Chicago. And it's changed hands a couple of times, but it is an institution. So we got to answer Jack Schwartz's question.
There you go. It has a historic legacy for the markets.
Indeed, it does here in Chicago. But I think there's a little confusion here, and I just wanted to make sure that Jack understood the benefits of options and why people say it provides leverage. And I'm just going to go through an example. One, right, if you have a margin account, you can get 50% margin at most brokerage houses, meaning if you buy a stock that you're going to have to put up 50% of the capital in order to buy that stock, and the rest of it they'll loan to you, which is margin, and they're going to charge you for borrowing that money. If you buy a future, you've got all the risk. Futures are margined differently. Just because the rules of the CFTC versus the SEC, but you're going to have all the risk if you buy a future of going down or going up, just like you own a stock. Here's where options get a little bit more fun. And I'm going to use Apple as an example. There's leverage inherent in owning an option. If you wanted to buy 1,000 shares of Apple, it's trading at $116 roughly right now. It would require $116,000 to buy that. And if you bought it on margin, you'd have to put up 50% of that. And it's a fairly substantial amount of money. Where the leverage comes in with the stock replacement call is you want to control 1,000 shares of Apple, you only need to buy 10 calls because each call represents 100 shares of stock. And if I were to, and I'm just going to guess, someone might have the options chain, but let's say we were to go out in November, which is a little over a month away. If I looked at the 115 strike, I'm betting it's around $4. Am I close? I got to be.
We can answer questions like that here on the program, Todd. You said one Nove 115s.
I almost went out Nove. Let's go out a month, a little over a month.
Nove 115s. Let's skip the weeklies. We'll go straight up to the Nove.
It's got to be around
$4.10. Talking Apple,
God.
right?
Yeah, I was off by a dime. So let's just round it off to let's call it $4.
You cheated before you walked in here.
I know how to price this stuff all right. I used to do this on the floor for a living. At $4, if I bought 10 of those calls, so I'm controlling 1,000 shares of stock, and it gives me the right to buy the stock at 115. At $4, I'm spending $4,000. That's $4 times the 10 contracts times 100 shares per contract. So instead of having to put up $116,000, or if I margined it, $55,000, I only need to come up with $4,000. And that is the leverage that we talk about with options, is you can control a large quantity of stock with a relatively small, comparatively amount of money. The difference here is those options do have an expiration. I've got that control only out until November expiration, which is roughly, I'm going to guess, 40 days, a little over a month. But that is the leverage. That's the way for you to say, hey, if I think Apple's going to make a move and I don't have a large quantity of money to control 1,000 shares of Apple, I could buy 10 calls. But let's say you were you're interested in 200 shares of Apple, you could still just go and just do 2 calls. And if you bought 2 calls for $4, you're talking about $800, and that's the most you can lose. You cannot lose any more than the premium you paid for those options. And that is the stock replacement call. When volatility gets very low and it becomes relatively affordable to own the options, sometimes you're better off buying the call than the stock, because if you're wrong, you know your downside is limited strictly to what you paid.
Plus, you get all those fun Greek trade-offs, Greek benefits that the futures don't bring to the table aside from delta. You're talking options, you're getting your Vega, you're getting all the other fun things. So your delta will decrease as the underlying drops, which in a stock replacement scenario isn't the worst thing. You'll lose money at a slower rate. Your vol will increase. That should help at least offset some of your bleeding. You won't make money, but you won't lose money as fast. That's a nice thing. You don't get that with the futures. And I think he's probably referring to the single stock futures here as well. Something we don't talk about a lot here on the program. Maybe we'll have to bring them up to in a future episode. Mr. Rocklap, so I can also see you're chomping at the bit. I know stock replacement, one of your favorites, particularly using leaps to do that and writing near-term calls against a lot of different flavors of this strategy. What do you have to say here for our friend, the appropriately named Mr. Schwartz?
Well, we've done with clients stock replacement with stocks that have created great sadness for the client. So they're long them and they do the annoying thing of getting cut in half. So client says this is not very fun, and I agree this is not very fun. However, what you can do is your stock generally, we did this with Hewlett Packard I'm looking at a BMY now for some people. So if you have a stock, it just dropped, BMY just dropped what, $25, something kind of yucky like that. Bad earnings, it was 76, now it's 49. And you're holding, X thousands of shares, or even 500 shares. Like, well, this sucks, right? But what you can do is you can essentially double your delta for a fraction of the price. You dump your stock, take some of the money, and buy a long-term, near the money call. Try to create 100 deltas with it. But if BMY does come back, you will do much better, because your 100 deltas and options will eventually, if you do get, if it does bounce back a little bit, all of a sudden your delta it'll be 100, 120, 140, 160, 180, and you'll have twice as much delta exposure when the thing's moving back up again. So it is a way to, take some dollars out of the equity because it's acting sad, and you actually want to keep your exposure because you think whatever's happening will just blow over, which happens. But you want more deltas for the trip back up. So you just get a longer term, get to around 100 deltas in options, usually near the money, and go out a year in time. And it's a way to give yourself double the action, or a bigger percentage of the action on the way back. If you really wanted to be aggressive, you could take 80% of your dollars and you could take 80% of your dollars and buy near the money options with it, which would be a lot more aggressive. Then you'd really need the thing to go up. So that is a possibility, but that's, I think, one of the better ways for a replacement strategy.
Speaking of deltas, we've got. Oh, you got more?
No,
I thought you were. He's just scratching his head. Speaking of deltas, we run up again, so we got some live comments here really quickly. We got James T saying regarding the Nabors trade, Andrew, that he says it could be a straddle, which I may concur with him, except for the fact that we mentioned it was marked price variation, but there was no stock. If it went up with stock, then I can maybe see what he was talking about. As it is, it's just a short call over. We have to assume there's another stock leg against it somewhere else, but we didn't see stock going up with it today. So you can make that assumption with the stock that probably is out there, but not against exactly what we saw today. Oh, and Trader Anki thanking us, Mr. Rocklaps. Thank us yet again. Thank you for digging further into the dark side and providing in-depth analysis on CAB. So clearly he's tuning in live. So there you go. All your work, all your due diligence on CAB goes not unnoticed. Mr. Rock Lobster. So there we go. All right, that's all the time we got for the mail block. Now we'll keep on rolling into our final segment, Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Well, in addition to the he said, she said with Trump and Clinton, which is ongoing and always entertaining at the very least, if not mystifying and infuriating as well, we got a lot of other fun stuff to actually literally sink our teeth into this week with some actual real meat on the bone here this week with some actual earnings. Tuesday, kicking it off with our good friend Alcoa. And then the ball gets rolling from there. Thursday, we got Delta, we got Marriott, we got Citigroup on Friday, so all the financials coming up. Wells Fargo, it'll be interesting to see how they're faring coming up. JP Morgan as well. So if you're kind of like us, have been itching to sink your teeth, forget about the macro craziness, forget about the will they, won't they of the Fed, forget about what the heck's going on with random negative rates in country of, or would pick your poison. You wanted to sink your teeth into something nice and material, then this week, hopefully, and the subsequent weeks to come, we'll hopefully have something interesting for you. That said, let's start with you in proximity. Todd, what else, if anything, is catching your eye this week, sir?
For the rest of this week, there are some economic numbers coming out. So keeping an eye on that. And really, it's just the beginning of the earnings cycle once again. And I always like to kind of put a little plug in here. If you go to optionmonster.com and you check out our research lab, there is a calendars function. And if you go out to that calendars tab, it will tell you what economic reports are coming out, when different speakers from the Fed are going to open their mouth, because you never know what they're going to say. And then if you want to take a look before and after the market, which companies are coming out with earnings. So it's really kind of handy to be able to find all that in one place.
A Fed guy speaking, isn't that pretty much a day that ends with a Y? Someone from the Fed is saying something. They should really tamp down on that a little bit, maybe. A little bit less Fed speaking. Maybe one person speaks for the Fed instead of all of them. But that said, you can find it again. I'm looking at it again right now, listeners, optionmonster.com, and click on the research lab, then the calendars tab. So 2 clicks as opposed to 1. Don't let me mislead you. All right, and Mr. Rock Lobster, what do you keep an eye on for the rest of this week, sir?
This is one of those weeks where I guess we're waiting for earnings. This is the kickoff, right? So maybe, just maybe, we'll have some action, see how the financials do, how the oil companies do them but usually I think they're a little later in the reporting cycle. And see if the Qs will continue their inexorable rise up. Funny to note, in the dot-com bust, the QQQ, I can't remember exact low tick, but I think it was $18. So just for you scoring at home, you could have had the QQQs when they were $18 in 2000. I believe it was 2. So if people say you can't make money buying stocks or technology stocks, when you wait till there's so much blood in the water, the sharks are all full, that is a time. I think you also could have bought Amazon, eBay. Google wasn't even listed yet. There was four stocks for probably less than $20, and I think they're all worth about, $1,800 right now or something.
You want something
like that,
painful?
something crazy.
You want something painful like that? Go back and watch. There was a documentary years ago called Startup.com about the .com boom, and watch. There's some interviews with some of those characters on CNBC. Just watch the ticker that's going by underneath them as they're talking. Yahoo 400, AOL. It will literally bring tears to your eyes. I guarantee you. With some of these market caps that they were throwing around so cavalierly just not that long ago. But speaking of cavalier. We're known to get a little cavalier on this program every now and then. But it's time to bring this party to a close. What a journey it has been. We started off, of course, with all things Deutsche Bank and VIX, a little bit of Apple thrown in there, a little bit of Twitter, I should say. Apple came later, then, of course, all sorts of fun stuff in the Odd Block. We're visiting Cabela's, talking about JP Morgan, as well as some other funky stuff. Here in the old Odd Block today, answering your questions yet again. Nabors, we talked about Nabors as well, and Boston Scientific and ETE, and then wrapping it up with all things stock replacement, which is always a fun topic, and then looking ahead to the joy that is earnings season. But one last time before we go, let's check back in with my cohorts here. See what they have cooking up that may interest you. We'll start with you, Mr. Rock Lobster. I know you got to hop off pretty soon. What is coming up in the land of the pit?
We have a Saturday class coming, the end of the month, trading volatility, which we might actually have some again. Look for it from us if you're an Option Pit subscriber, of course. It is free, but for all of you that want to try our goodies, it is the cost of an eighth on a 10 lot, which you have to go back in the archives, maybe 3/16 on a 10 lot. But people find all of our webinars. Generally, that's how we get clients. So they must like them.
There you go, optionpit.com. To learn more, go forth and prosper, Mr. Rock Lobster. And Todd, before we go, you're always talking about the Option Monster site. I'm looking at it right now. You have a lot of great tabs on here. Research, bullish, and bearish, those two. Very confusing. I couldn't possibly know what those were talking about. Education, as well as this premium services tab. We find our listeners, they tend to like to talk and engage and chat about stuff. So if they were so inclined, what should they do? Over there in the Option Monster land. Mr. Todd, take it away.
We are a subscription service. You can come and take a look at what we've got to offer. Optionmonster.com. And there's some great ways to interact with our community and participate, but I really like to always point people toward our research lab. It's a very powerful tool, great way to identify what's going on in the market, where you should be looking, and where you're seeing a lot of this unusual behavior that we talk about. It does get highlighted in Research Lab.
There you go, listeners. OptionMonster.com. Then click on the Research tab to learn more. And again, a lot of that stuff is free. You can go search on over there, click on some of these things. Maybe you'll find some interesting nuggets. I believe it was Brazilian Energy Utilities a few weeks ago. So you never know the nuggets that are going to come up on the old scanners out there. OptionMonster.com. to learn more. And on behalf of Todd and Andrew, and indeed myself, even Uncle Michael couldn't make it today. He's on assignment. We want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And of course, for sending in such great and many and varied questions. Keep them coming. We love hearing from you guys. And we'll see you next time right here on The Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.